Good evening, this is JP from tradingthenumbers.com. Today is the 8th of February 2009 and this video is to recap the trading action and the events as they occurred and some other charts and discussions that took place at tradingthenumbers.com. I have tried making the video into a very short video, but there's a lot to go through, so I'm going to break this into 3 videos, and this is the first of 3 videos. Okay, if we look at the action, we failed to get a Christmas rally. Santa arrived late. It was from about the 29th to the 30th that we saw a pop. Into the 6th of January, the website TDN had identified this as a potential top. It saw structures within this move into the 6th of January as a possible high, and then started trading to the downside from a corrective aspect until it was apparent that it could be more impulsive than corrective, and carried on to the downside into the potential of the 21st of January being identified. And from there we were looking for a high into the FOMC window and a move to the downside, and from there the move that's happened to the upside. Okay, so this is a 45-minute chart just being used to show the move to the up, down, up, and the relevant trend lines. I'm going to go into the website and show you some of the articles that took place to take it further and explain to you what exactly had happened. Okay, we go back to into the website. This is trading.danumbas.com. This was a commentary that was put on the first week of January and showing another typical example of how we operate at TDN with a special focus on catching trends and using support, resistance, and target levels to punctuate the market moves. And from here, if I, instead of going into the first chart, I'm going to go into the second chart to show you exactly where we were. Okay, we came into the 29th of December 2008, showing that the Christmas rally had failed. We had made a low into Christmas, which is not normal. And what we were looking for is what the support areas are to hold, where were the immediate resistance bands, what was the possible target, and where exactly the lines were. So from here we were looking at a line above 871 to open up a test of the 882, 883 levels, and if this area became support, then it would go to the 898 and up to the 910. But to do that, it needed to make sure that this area, this specific area, the 854, 853 level held. So if we go into the previous chart, which I did not show earlier, what we can see is on the 29th, it actually moved down into that 29th, into the area that we had identified as an area that must hold. There's the 855, 854, 853 level that we were looking for, that had to hold. In the evening, it did hold and it started moving out to the upside. This area was an area that we were looking for as a change in trend, which is what we refer to as a CIT. And in essence, we got an inversion within the trend. From here we can see it moved into the 75-76 level and it tested first as resistance, came down, consolidated below it, moved through and went straight to the second level, tested as resistance first time, moved down to test the area that he had crossed over as having been support, and used that as a base to move to the upside to 97, 908 on Christmas, on New Year's Eve. Came back down, opened on New Year's Day to the upside with a gap, consolidated slightly below and launched itself right up into the 930 level. So that was basically how the first day of the year took place. From here we were now looking for a possible high in this area. You can see this is a chart from the 6th of January, and we're looking at the move upside, looking at areas potentially on the upside and where it had to go to the downside. So this was the area that it bounced off on On the 5th of January, it consolidated within the area, testing 32 as the resistance level and testing 20 and 18 as the old support level. Identified an area just about at the 940 level as resistance, and if it took that out, then the next higher target was around the 950 level. So if we close that, we had a chart for Nasdaq. Nasdaq had been more impulsive or leading to the upside, and that gave us an added clue as to its upside potential. Coming into the day, we were also aware that we had significant statistics that the last 8 trading days had resulted in a gain over 8%, which is normal at any other time, but the volume on which it had done was very low and it was unprecedented. What we had identified was that if it went below -20, then the minimum that it gave in the downside in 2008 in similar situations was about -140 points. So those are the stats that we had published prior to the opening of the trading action on the 6th of January. So we were looking for a move to the high side or a move around here, which would flag, and we were looking for a move to the downside from here. So if we take this from here and we look at the chart for the 6th, this is exactly what it did. It moved into the higher resistance area up to 942.50, came down and tested the 927.50, which is the halfway line, moved back up into the 940 level and stopped and turned back. This was the area, the 914 area, which had been identified as a must-hold level if it had any more potential to the upside. If we look at this chart here, what actually happens is the previous exhaustion area, which had to hold as support, could not hold as support. It had gapped down, turned into the area. The bottom line held as support initially. It went up, and this area could not hold it, had turned straight away into resistance, and it broke through the 914 area, which identified that it was too deep for wave 4, and this basically opened up a potential for significantly more downside risk than upside potential. If I just close this, this is the first of the 3 videos. I will, if you wish to carry on with this video, you'll have to look at the second one. I hope you've enjoyed it. You can see the other videos at www.tradingdonenumbers.com. Thank you very much.